There are two main trading styles, momentum and mean reversion. And while at the moment in markets globally and here in Australia, it's clear that momentum is the only game in town, we actually had a night of mean reversion overnight. Gold prices fell, bonds came off a bit. We saw pressure on shares, although they did manage to finish in the green for most of the session. They languished and only bounced in the last hour of trading. And we saw copper rally back, along with iron ore. So that mean reversion last night meant that markets basically took a bit of a pause. But it's a good time to be talking about a key dynamic, particularly in the US market at the moment. The US government is shut down. The Congress was not able to agree on what we would call a supply bill here in Australia. That is the funding of the government, and that means government employees are stood down while those negotiations between the two major parties in the US continue. Now, this is definitely economic bad news. Whether it's long-term and damaging or destructive news, or whether it's just deferral of current demand, is an open point and something we could debate. But it's definitely a negative. And yet share markets are rallying on this news. And the reason is the bad news is good news dynamic. At the moment, when we see bad economic news, markets are pleased because they make an immediate leap to a lower interest rate environment, supportive of company balance sheets and supportive of share market valuations. And yet this dynamic will run as far as it can. The reality is at the moment, US markets in particular are trading on the greater fool theory. Now, this is a well-known theory in markets. It tends to come at the top of bull markets. And the idea is, even though the price that I'm paying today might be foolish, I'm paying it on the expectation that tomorrow there'll be a greater fool who'll pay an even higher price. Now, this dynamic works until it stops. And because it's not a rational dynamic, saying when it will stop is very difficult. And as I say, at the moment, momentum is the only game in town. So it's good to be aware of those current risks in the market. This sort of turnaround can come very sharply because it's sentiment-based. The sorts of triggers we've seen in the past include debt market ructions, poor inflation data, poor growth data. What will be the trigger this time is anyone's call, but at this stage, we're still running up and the momentum in markets remains very positive. And looking at our watch list today, we see that illustrated very well. NVIDIA currently trading above its previous all-time highs. It hit another record in trading last night while it pulled back from that 191 level. To close around 188, it is still at all-time highs and still in a clear uptrend with a breakout from the previous trading range. In technical terms, this is a very constructive, a very bullish setup on NVIDIA with the break above the previous trading range to all-time highs, suggesting the stock is breaking out and could make significant further upward moves. Of course, a failure below the breakout level at 184.50 would negate that technical scenario, but nonetheless, looking very impressive at the close this morning. Looking locally, BHP is on the radar. The talk that there was a ban or a pause on buying iron ore from BHP while negotiations with the Central Buying Authority in China were ongoing initially caused a big sell down in BHP, but the market has recovered most of that sell down. It is being seen very much as a negotiating tactic rather than an actual disruption to the trade between the two groups. The reality is China needs BHP iron ore and BHP needs China buyers. So it's likely, or the market seems to be thinking at the moment, that it's likely a resolution will be found here and that any disruption will be limited to a temporary deferral of demand. So some outlook there for BHP. And last one on our radar today is Tesla. Its shares fell 5% in overnight trading. But one of the reasons for that is the very steep rises we've seen in Tesla's share price recently. It's zoomed higher. It's heading back towards the all-time highs at 488 at the moment, although as last night's action showed, the rally can be fragile at times and big pullbacks are a common occurrence in this sort of scenario. Tesla is trading on an eye-watering 260 times previous year's earnings, but that doesn't seem to hold investors back. And once again, momentum is proving to be the only game in town for Tesla shareholders.